So let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money cannot afford to lose. So happy day to you. Like I said, I hope you're safe and healthy and sane. Not insane, but sane. And sane. Not insane, and sane. Yeah. So Tate's confirming this part of Georgia got slammed. Just came out of the middle of nowhere. So, like, for example, I was on my laptop outside smoking a cigar and talking to Ryan for about 2 hours. And by the time I realized there was a storm, I realized, yeah, I brought my laptop in, but not the power cord. It just like went from hero to zero and in just minutes. And then it was gone. So anyways. Okay, so let us go here. Let's focus on now. Okay. Here's the trade plan we talked about yesterday and the trade plan we talked about the day before. What do you think, guys? This was our sell zone, second chance opportunity. Initial target 2 days ago was here. Then yesterday up during Asia, down during London. And our target is right here, 117.50. The target the day before was 18. So we got Tuesday's trade. Bingo. Boom. We got Wednesday's trade. Boom. This is what I say too, by the way. This is what I say here is that, when I log into New York and I'm like, yeah, it's already done. This is what I mean. Like, your trade should be up here. And this is where you're deciding what to do next. Should you take profit? Depends on where you are. Is there any news on the calendar at the moment that will carry this further? And really what you're trying to set up is tomorrow. So going back to the Mark Fox said fear of missing out got him bad yesterday, and he lost money, I suppose. So I interpret that with somehow you were chasing price and selling low, and that's dumb, right? You got to cut that out of your habit. Okay, so like when I say like fear of missing out, you had like a window of probably 12 hours to set up the 1 day trade. There's no missing out. You're 12 hours ahead of the market. So like in the day trading group, we talk about being, what I say is you're expecting a window of 5 hours. Okay. Sometimes it takes a little more, but you're certainly not missing out because you're somewhere between 6 and 12 hours ahead of the market. So how can you miss out? You're in front, not behind, right? The bus doesn't leave, right? Or whatever. I don't know. Find an analogy. But with proper trade planning, you never miss out. Okay. Well, I shouldn't say never. There's situations where the market is out of position and you just can't trade that. So it's not that you're missing out. You're not willing to trade out of position. The reason for that, as Mark found out, is it very often leads to negative results, right? So you let it go and then you catch the next pullback. So it's not that you've missed it. If the market doesn't come back for you to put in a second trade, then you just wait until it does. So you have to replace the fear of missing out with patience and discipline. Okay. Oh, no worries, Jean-Guy. Good to have you here. Okay. So, Mark, we can work on that. It's a very, I suppose, newer thing to have. When you're a newer trader, that having fear of missing out, and then adding losses to that, whoa, 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 whoa. So that's a huge red flag, right? But we can fix that, Mark, with proper trade planning, and we'll replace your fear with patience and discipline. Right? Yeah, thank you, Jean-Guy. Yeah, I was just explaining that we had a tornado cell come through here. Okay. So anyways, but are you guys starting to see, I don't know, light at the end of the tunnel? How we've been planning these? So here's Monday's trade. Sell, but it gapped, so you fill the gap, and where do you sell? The retracement. Now this went at an early time, and then the London boys took it up, and the New York boys took it back down. But still, the proper trade, you're in here and your stop's up here. So Monday, okay, Monday, your opportunity was clear. And our target on Monday, because we did this as a group, we actually did this on Sunday night. So this is really your Sunday night entry. Our target was 118. So there's one trade. The new day goes along and comes back into the sell zone. So in here, you're selling somewhere. And your target is, once again, 118. Okay? Then, last night, or yesterday, depending on when you do your planning, here's your new sell zone. Okay? And you're selling here, and your target is basically 117.50. Okay? Well, the thing is, this sell here is at 120. The second one is 19.50. And the third one is 19. You see the logic there, guys? You see the logic of how the psychological and midpoint psych levels come into play? You sold off 120, then it dropped. Then you sold it off 119.50, then it dropped. Then you sell at 119. I guess that meant that was supposed to be 19. You see the logic? No matter how much chaos there was, it's very, very logical if you choose to look at it intellectually and not emotionally, right? Okay. Let's see. Baby Jean, having issues adding to winning trades, like if there's a lower high, but a higher low on a 15-minute. That's probably a timing issue, Baby G. Or you need to rely more on your higher time frames. Okay? So like Ryan and I were talking yesterday about, the similarities of our, of me doing swing trading and him doing market opens and stuff. But we both agreed, like, without a 4-hour candle, we can't, there's no setup, right? Because without having that 4-hour chart, you can't see the forest from the trees, right? So that might be another issue, Baby G, where you might be stuck in noise, okay? Like, I would fear that you're making decisions here and you lost sight of the basic fact. What's the basic fact? You're a seller there, you're a seller here, and you're a seller here. Everything else is almost irrelevant, right? Now, everything else is a timing issue. And that's why in the swing, well, it's not really the swing trading group. In the day trading group, no, I guess it's both, actually. One of the benefits of day trading and swing trading, and by the way, my form of day trading is a form of swing trading, okay? As they say in Canada, it's the same, only different. One of the goals of that style or that methodology of trading is you're trying to remove time from the issue. Okay? So, that be that. Okay. Can you guys see like this? I'm trying to simplify things. You see? it seems like you got to take a shot. Well, say I don't know where you're selling. And I don't know what time you're selling. So I don't know about just take a shot, but that's what demo accounts are for, right? So, I mean, so how many pips is this? 120 down to 117.50, right? So 250 pips. So this, right, 200 and 150. So it really depends. You know, this market's offering on average, 150 to 200 pips on your day trades. Where are you entering your trades? What time of day are you entering your trades? How much risk are you taking? Meaning, like, how far away your stop loss is. Very often, and as we talked about in this webinar either yesterday or the day before, very often you guys are trading like with 25 pip stops. Okay. One way to know if your trade planning is any good is see if you could trade with, let's say, 125 pip stop. Now, of course, you do this on a demo, but if you used a stop that wide, are your trades becoming profitable? See, if you have a stop that far away and you lose, you are like 100% wrong on a basic like direction. Like you were wrong on the entire move of the market. Now, the market can change and that can happen, but if you consistently lose with a 125 pip stop or a 150 pip stop or a 200 pip stop, if you consistently lose, then what that tells you is you're buying in a downtrend. And of course you're going to lose. You might be right for a little while, but of course you're going to lose if you bought here. Okay? So that is actually some pretty powerful information to say, oh my gosh, I'm trading against the trend, or I'm not even looking at market conditions. So I'm trying to train you guys to ask yourself, are you a bull or a bear? You decide that. And then you open up a chart and say, well, is this a bullish market or a bearish market right now? Right? We call that momentum. In the moment. Is this conducive for your trading? And very often you guys trade in wrong market conditions. It's not that you're a bull. The issue is you're a bull in a bearish market. That's the problem. Okay? So there could be all kinds of little things. So you can really, baby G, I would use my demo account to try to figure out what my strengths and weaknesses are. Oh, wait. You could write a book on that. No, wait, I already did, right? Right? So that would be the point. Like, why are they not working, right? And try to figure out. Go after the why. Don't just change things. Okay? Like just throwing down trades earlier isn't the right way. But what if you did this? What if you practiced using limit orders to get in? So like, for example, you're in this zone, okay? And right? You want to sell somewhere around here. You're eyeballing this 119 area. So you throw down a limit order. Okay? And you're like, I want to sell just before 119. And then use your OCO. Hang on. Sorry, that was Jay Powell. He needed some advice. Okay. So anyways, so one of the things you do is then you use your auto stop tool and your stops up here, let's say. Actually, looking at this would be maybe here, but even up, as much as here would be better. So yeah, sorry, Illuminati business. All right. So anyways, Commissioner Gordon for Mr. Wayne. So I don't know, like that's what I'd rather, sort of the attitude, baby G, is not like just get in earlier. No, practice. What are the different ways of getting in? What are the times of day? Like, go through these charts. What time of day seems to be a good time to trade this? And are you trading in that time of day? Okay? Okay, that's all. Yeah, just go through it using some sort of scientific methodology and not winging it. Okay, cool. So anyways, so the day trading group's probably been crushing that one. This one, we've been talking a lot about the old man easing into the hot bath idea, and we've been locked in this zone since Sunday. Okay, so we had this set to fall, and well, one of the things we talked about, I guess it would have been Monday night. I wasn't even supposed to do a Monday night. So I did Sunday night, and then I wasn't even supposed to do a Monday night day trading meeting, but I did one anyways, in between my two classes. Okay? So Paulie tiptoed into this one. Yeah, cool. But one of the things we were talking about, I guess it was Monday night, was that, well, you're not wrong. It's just not right. Like, it hasn't moved yet. And somebody asked a question in that meeting, something like, well, should they get out of this trade? It's not really working. And I'm like, well, it's not working. Okay, right? You understand that? Like, you're not wrong, you're just not right. So give it some time. That's the whole point of swing trading. I'm like, you're going to be in this, like, short, this pair, if it falls, all week, maybe all month. So, like, what's the big deal? Chill out, right? Like, give it room to breathe. But if it makes a higher high, panic and get the heck out. So anyways, so Paulie, I hope you're in here somewhere. Okay? But the idea was that we had on Sunday is we're looking for this. Okay? Hard to stay in for sure because there's been some bullishness in the pound and we're seeing this. Okay? Okay? Guys, there's a training course on MetaTraders on how to move the profile files into the profile folder and how to put the indicator files in the indicator folder. You should watch that. I think you have to pay $14, or you can surf Google and YouTube, and there's tons of videos of like how to put an indicator file into an indicator folder. Tons of them. I don't have time to do customer support on a $5 product, especially when you could just Google it, right? So you go File, Open, okay? Now it opens. You put the templates in the template folder. You put the profiles in the profile folder, and then you put the indicators. You have to click MQL4 on that one and put that in the indicator folder. That's what you need to do. Okay? That's it. I just described it. Okay? Now, if you're putting MT4 files into an MT5 platform, ain't going to work. So you need the MT5 files. Okay? Okay? And there are MT5 files on the site. So make sure you got the right ones. Sorry for being blunt. I don't mean to be so blunt. I just don't have a lot of time today. Okay? So that one came down. Let's take a look at Kiwi. Black hole sun, won't you come and wash away the pain? Black hole sun. All right. So Wednesday, Tuesday, Monday. So this is today, yesterday, Monday. So what we had here on Sunday evening was this idea that this zone is a sell zone. You don't see it here, but it's there. And that we were looking for lower low, lower high. We felt uncomfortable with this not doing kind of what we wanted. Wait, I didn't go far enough back. Why did I do that? Weird. Hang on, let's do this again. Let's do this again. Wednesday, Tuesday, Monday. So it was here. Okay. So we had this. Wow, I remember this differently, actually. It's funny. Is that right? Wednesday, Tuesday, Monday. So we were here. I remember, maybe it was the Aussie that took off. Do you guys remember Aussie spiked up while we were looking to sell? Okay, it was Aussie. So there was a warning flag on some of these. Because all I'm trying to say is, in the time of planning, this was not perfect. In fact, this one was a little scary. But our plan in here, guys, was we had an overall sell zone of here. And inside of that, we wanted to be bears. So we wanted to be bear here. So the idea was we wanted this. That was the plan. And what we got was this. Was there really that much? Was there really that much need for panic or fear or giving up? I guess is another emotion. Was any of that justified? The giving up? Oh, I didn't make money on it today, so I should walk. Well, yet another thing I'm trying to teach you guys is, what do you know? Not what do you think, what do you feel, what do you know? And what do you know is it hasn't made a higher high, so it's not bullish. Okay? Okay? You see that? Maybe you're not, in the beginning, you're not as right as you would like to be, but this is swing trading, not scalping. Okay? So, not wrong is a form of right. It triple topped, by the way, right on our price. So, not a coincidence either, right? Look at that. Okay? How do you trade a breakout? Like that. Okay. Breakout, pullback, gone. Okay. But the thing is, what I've been teaching is, you're selling up here, not here. Okay. And because of your analysis of the higher time frame, you get proper setups. Now, is it perfect? Well, you'll notice none of these trades are actually perfect. Are you guys waiting for perfect setups? Or are you looking for in the zone type setups? Has anyone paid the penalty of seeking perfection? Customer says, I get the stop should not be tight, right? But even your, no. Yeah, well, customer, Start with a 133 pip stop. Practice on your demo. Find out how much room you need to breathe on your trades. Okay? Because when I say 33.99, I'm trying to make a point here where if you sold in such a place that you need a 77 pip stop loss, right? Then cut your lot size in half and give yourself that. Okay? Because then you can say, well, it's not quite 33, it's closer to 40. So you're taking 40 pips of risk because of the half lot, but take the trade. Because you set up a good, technically good trade, right? Like, this is how you trade a breakout every time. Okay? Now, you might have wanted a little higher. Well, then so be it. Okay? But if you find you have to take the shot here at, 64.40, and you want your stop up here to be 65.20, okay, that's 80. Yeah, cut your lot size in half, bro. At least you're in it and winning it, right? So mentally, you're only risking the 40 pips or whatever. Don't worry about the limit. The market's going to give you what the market's going to give you. Okay? My fear is you guys make good trades and then you bail out because you got 50 or 100 pips and somehow psychologically that's important to you. But you don't know if the market was willing to give you 500 pips because you never even asked the market what it wants. So you can control your entry and you can control your risk by managing your lot size and your stop size. But you have no impact on where it's going because once you put the money in, you need other people to put more money in. But your trades should be worth, every time you pull the trigger, I'm sure your trades are worth 300 pips. Sure of it. And if you're not, then we need to get you to be a better trader. Okay? And we can do that, by the way. We can do that. Okay? So I'll give you a sneak preview of what Ryan and I talked about yesterday. I'm going to create, along with Ryan, a new program where in 21 days, I can prove to you, beyond a shadow of a doubt, that you can be successful trading Forex. You'll see it, you'll know it, you'll believe it. I can prove it to you in 21 days. Just beyond a shadow of a doubt. Okay? And that's that. Yeah. How will it work? You'll have to wait and see. Okay? But the question is, what if you're still not successful? You know you can. You see what is required. You know what kind of work goes in. We can also prove to you it's a lot simpler than you've probably been led to believe. Okay? Raymond, I've just put everything full stop on that. But it's in my mind. So if I can't do a mastermind group back then, perhaps I'll just write a book and start with that. Okay. 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 And of course, the part I like about the Mastermind group is it'll be focused not on trading, but on starting managing and raising money for your Forex business. And I just don't think that's done. And if it is done, if someone is doing it, I can do it better. Okay, I've helped people raise millions and millions of dollars, brought in speaking coaches and everything. I had a really good setup. So I've already done it, so I know what to do. Okay, all right. So let's go into here. This is our trade plan going back to Sunday. Okay, we wanted to be bears. We have this plan of let it come down, let it come up, and sell it. Make a lower low, be challenged by bulls. Obviously, there's bulls here. Now, of course, we haven't even hit that price, but that's what we said on Sunday. So this is on Sunday what I'm talking about. Then there was Monday. Then there was Tuesday. Okay, so now, look at our plan, guys. So the general plan, if you want to take a bigger time frame, looks like this. Now there's probably a hiccup in there one more time. Let's do it this way. This is what we had Sunday. Down, up, down, basically, right? Target already picked out. So we're selling here at 67 and our target is 62, 500 pips. I think about 4 or 5 or 6 of our swing trades back then on Sunday had 500 pips or more. Could it be a range? Of course it could be a range. Okay. Looks like we're breaching the first range. Okay. But what did I just say? Where are the bulls living? Where are the bulls waiting? Where's the ambush? Where's the ambush? You know, a good military leader can say, no, we're not walking through that valley. We're not walking through, through that town, not with those, and they're looking around because they're like, okay, there could be snipers up there. We're going to get pinned in. We're too close. We're too bunched up. I'm not walking in there. I'm not going that way. I'm not taking that route because clearly there's danger. And if we get ambushed there, we're screwed. I'm not doing that. And this is sort of a thing, like you should know you're walking into an ambush, the bulls live here. Okay? So what might happen is, cool. Well, prepare for it. Okay? But nonetheless, it's been, 36 hours, and our plan was sell it, keep it below 67, we're on our way to 62. Maybe 61. And now we're talking later now, the rest of the month, then we're going to be challenged. The closer we get to 60, the more it's going to want to come back up. You understand? Can anyone from this day trading / swing trading / COVID-19 support group confirm any of what I've talked about so far today? That these are slow and maybe unspectacular trades, but they've all been planned? Yeah. So, again, the issue isn't me being right. It's my job to be right. But the issue I think that's interesting to talk about is what if you talked yourself out of this? What did you learn? What can you write down? What would you tell yourself in the future? Okay? I know this has actually been some challenging 2 or 3 days in a row. I get it. But what would you tell yourself if you were your own coach? See, when I started, there were no coaches. When I started, there were no books on Forex. Can you imagine? I went to Stanford University's bookstore and got a book on international finance because it had a chapter on the foreign exchange. Not helpful, by the way. You understand? So I taught myself. Okay? And I explain this in great detail in my book where I'm like, hey man, I didn't know anybody. There was no information on what a good currency trader was. I didn't know any currency traders. I don't, banks, like, or were opaque. Like, what do bank traders do? I don't know. So I had to mentor myself. And that requires a lot of observation in the market, right? I don't know, so I need to test. How do you create a COVID-19 vaccine? Well, you better get in the lab with your pen and your pad, to quote the great Dr. Dre, of course. He can finally feed his family with groceries. Yeah. So, I don't know what your answer is here. But what did you learn? If you captured that type of information, what did I learn here? What's my takeaway? How can I improve? How could I have done this better? What would I tell myself in a situation like this in the future? If you have that kind of process, I think you'll become a successful trader. But it's the process. So I wrote a paper at Harvard just recently, I guess 2 weeks ago, about diversity and inclusion. I'm like, look, the first form of diversity was just hire a bunch of people that you are unrepresented in your company. Just get, like we need like 3 more women on the board, get any woman, it doesn't matter, and get some more black guys, right? And you're like, whoa. That's not true diversity. You're just hitting some quotas. But that was step 1. And then step 2 is, okay, let's actually try to like benefit from having diversity. So hire a bunch of Hispanic people and get them to open up a market in South America. And you're like, wait, you're just basically creating a second company and filling it full of people that are the same and then letting them run autonomously doing that bunch of stuff. It's not really diversity too. But that's what, right? So the third one was you get people all together from diverse backgrounds, diverse cultures, diverse ages, just diverse as you possibly can, right? But everyone has the same amount of power. Everyone has the same amount of pay. And I compared this to if I were starting a hedge fund and I had radical transparency and as much diversity as possible, but then created a process that includes everyone's idea. You get better ideas. You get more vetted ideas, right? So you have to take yourself through and like, why did I vet this? How did I vet this? How can I learn from it? How could I have had it differently? And you'll see that it's your process of thinking that makes you a better trader, right? How diverse is your process? How many things can you learn from this process? Right? The process is what makes you better. Not just because you filled a quota. That doesn't make you a better company. You know what I mean? So I don't know if that's too out there, but you have to have good processes if you're going to be a good business. Okay? It's not enough just to say, well, the 5A crossed down, so I guess I'm a bear now. What is your process of analysis? What's your process of planning? What's your process of learning? Okay? So hopefully that's not too esoteric. This one just never quite got there. This one just never quite got there. You should be able to see that right away, like not really a great entry, not really a great price, not really great action. So not really interested. Okay. That was my take on it on Sunday anyways. Okay. Still went down. Having it fall is not the point. Having steady, conservative, discipline-based, repeatable plans, that's the point. It can fall. If it's not part of your plan, it doesn't exist. Who cares? Remember, it's not what it's doing, it's what you planned. Okay? What it's doing, irrelevant. What you planned is relevant. Is it fulfilling the plan or is it not fulfilling the plan? If it's not fulfilling the plan and you're in it, then you'll probably get knocked out. If you didn't have it planned, you're not in it and it doesn't matter. So again, I looked at it. Where did that kitty cat go? I looked at it on Sunday. Everything else looked good. This didn't look that great. So I kind of like, probably being impacted by oil. Yeah, absolutely, Samuel. Yeah. Is it below 19? I don't have my phone in front of me. How far down is Delta then? You said airline prices are falling. They've been up for a week. So what do you got? What's Delta? Delta Airlines stock price.
Delta Airlines closed down 0.04% yesterday at $28.53.
No, it's way up, dude. It's way up. Delta, you could have bought it at 20 a week and a half ago. So yeah, it's way. Okay, you got to remember the last financial crisis, you could buy Delta Airlines for $5. So, the way I look at it is Delta is up, not down. Okay, and that had to do the difference with the market and the economy, right? So, anyways, so that's that. You know the loan. You guys want to do some Bitcoin? Whoop, whoop, beep, beep. Oh, is that right, Hope? Right on. Yeah, but you got to remember the market's 6 months in advance, right, Mr. High Volt? So you guys remember like 3 weeks ago, I'm like, you need to write down a list of all the stock you want to buy. And then 2 weeks ago, I'm like, hey man, this is probably, these are good prices. Everything is down 50. Some things are down 60. Are you going to do this and are you going to do that? All of a sudden, I haven't talked about it. Like, you might have missed it. I mean, right? How many wake-up calls need to be issued? So the bottom may have been printed. So now the only question is, will we double bottom before it goes up, or did we print the bottom? Well, time will tell. Okay? Time will tell. We don't know. All right, so here's our biddy coin. Huh. That's really strange that we wrote that down on this chart. Yeah, but that's not going to affect the stock market. Like, okay. Put it this way, like Mr. Highvolt, in regards to like, let's just talk about the U.S. stock market. China, the entire country of China got shut down and the stock market went up. That's how dumb it was. And we talked about it too. I'm like, what is that all about? Like, people don't see this coming? Like, talk about irrational exuberance, right? Like, now, do you guys remember? I'm like, now's probably a time to hedge. How about, a put? How about sell the S&P 500 futures contract, right? Remember all of that? I'm like, hello? The second largest economy in the entire world. right? Then I said, maybe the stock market will crash when people can't get a new iPhone. Oh my God! Right? 100,000 people have died. And Apple stopped shipping iPhones. No way! I can't get an iPhone. Oh my God, it's the end of the world. You're like, dude, what about the 100,000 people that died? That doesn't affect me. But if I can't get my iPhone 12, I think, what's the point of living, right? What's the point? Right? Mr. Five, no one's driving in Wuhan. All right. Yeah, absolutely. That's why the dollar's weak. Right? Might be a good time to redo the fundamentals course. Sharpen the saw as far as monetary policy. So anyways, here's Biddy. Biddy. Here's our sell zone. Okay. Here's our gap. Here's our gap fill. And now you're doing price action this way. And it will fall approximately $3,000. Okay? But you already know that. We already did this. We've already done this 2 or 3 times. You already know this. So if you know this and you planned it, you're short here or here, most likely the first one. And now you're adding to your shorts. But you've known this for like 2 weeks that this was planned anyways. I don't know if it's going to happen. But this is all pretty straightforward, right? Do you guys remember? Let me ask you a different question then. Sort of like the negative side of a positive question. How many people don't remember this trade plan? How many people don't remember that I planned out a $3,000 drop in Bitcoin using technical analysis? Thank you for subscribing, guys. By the way, can you also subscribe to the FX Bootcamp YouTube channel? I need to get that to 10,000 people. It's like 9,200, 9,300 something. Can you also subscribe there? There's a free training course if I need to bribe you or something. We can try that. If I can get to 10,000 subscribers, I might try something cool this summer. Oh, gee whiz, come on. There we go. youtube.com/FXBootcamp. Oh, is that right, Peter? Maybe I need a follow-up plan. Maybe that's the wrong plan. I'll double check. Yeah, so I need 700 more subscribers on this.
U.S. markets is driving some investors to foreign currency. Joining us again from Atlanta with some tips on trading and foreign money is Wayne McDonald. He's chief currency coach at Forex's FX.
Oh, look at that. Wrong link.
Good to see you. Thanks for coming back. Last time we kind of shortchanged you, so we're glad you could make it back. Basically, details of what
this is a funny day.
First.
Well, first of all, FX Bootcamp is an organization that teaches people how to trade.
Look at this Dow. Dow's 7,960.
People live while the market is moving. So, sure, we teach you technical and fundamental analysis, but most importantly, we teach you how to be a trader by holding your hand perhaps as much as 12 hours a day.
Anyways, I wanted to do this. playlist.
Pip by pip, candle by candle.
You know,
I think it's this one. Free Forex stream. All right. So anyways, so if you go to this channel, subscribe.
Hey, good day everyone. Grab a seat, make yourself comfortable. This is a presentation for the Daily FX audience entitled How to Improve the Timing of Your Trades.
There's 4
So
videos.
we are going to use moving averages. Now this presentation is going to be part PowerPoint, but also part live data. See, what I don't want to do is bore you with perfect slide examples of charts from the perfect world that makes me look smart because they fit my theories just perfectly. What I'm going to outline are the strategies that I use as a professional trader. Each 21 EMA is showing you to keep going in the direction the market wants you to. But if you have weak right now, again, this is the pound dollar. And what's the first thing I look for? I say
See?
right now, to
Look at
take
this.
some profit off.
This is a lot like what I'm doing today. Okay? My trading hasn't changed in 20 years. My trading style and methodology hasn't changed in 20 years. So anyways, please visit that one and subscribe there. Like I said, if we can get to 10,000 people, right? If we can get to 10,000 people, I might be able to do something cool in summer. What happens is we hit 10,000 and that unlocks some features that YouTube just rolled out. So I'll check that out. Polly, did I? I'll double check. So when I'm done my webinar, I go back through my email. Okay. So anyways. No. That's Forex.Today. That I'm asking you to do the FX Bootcamp one. There's something like 5,000 videos on that YouTube channel. Cool. So let's go to this other one for those that may not remember the original trade. Okay, look, this is what I drew for you guys last week and the week before. Actually, it was the week before, but we've just moved this. So how specific, right? Look at this, guys. I have it all highlighted. We have the sell zone. We have the upside resistance. I have this aimed down for the month and for the week. So look at this. On Sunday, we were here, and I'm like, yeah, wait for it to come up and then take it down. Cool, right? There's the weekly trade. It should hit $5,141.43 this week. But this should drop from 7,000 to 3,000. And you'll say, well, Wayne, that's a 4,000 pip drop. I know I'm being conservative with the 3. I'm throwing out $1,000 just. Okay. Anyways. So I'm trying to tell you guys, I don't know where this is going. This might be 3,000 pips higher at the end of the month. I don't know. But you can see I'm putting together plans days and even weeks in advance. Andrew, there was a tornado, knocked out my power for several hours, and when the power finally came up, there was no internet, so what do you call it? Comcast Business was actually down because of the tornadoes. So, okay. Oh yeah, thank you for the reminder, Jean-Guy. If you guys could take just a second of your time, it'd be appreciated if you click the like button. Please just let YouTube know that this is quality content. Just take 1 second, just click the little thumbs up button. That's all I'm asking for. Okay, again, just tell YouTube this is good stuff. Okay, let's go back to this. This is interesting because on Sunday we had this coming down. Not on this chart, but I'll explain it by changing the chart. Okay, we were here on Sunday and we said down. And that's interesting because we had the bottom, we had the higher high. Okay, let's do the bottom kind of differently. Let's redo that because it's a double bottom. The secret word for this is hammock. The opportunity is here. And we went exactly 200% up. Isn't that neat? And then on Sunday, we realized we were here and that it was actually a bear zone. Now, bulls can still buy this. And what they're doing now is they're measuring Fibonacci this way. Let me do this with an arrow. They're doing this now. That's what a bull would do. But a bear knew this on Sunday, that this was a bear zone. And they're thinking the opposite. Okay? Okay? Are we selling peso? Why? Why? And then someone else is talking about Euro Turkish lira. When I trade exotics, I'm carry trading. There's absolutely no carry. There's no carry trading right now. This has been risk off. So you'd have to be pretty ridiculously aggressive to be just straight up risk on. Okay. All right, thank you guys. Looks like half of you have clicked the thumbs up and the other half have not. So, interesting. So anyways, so you guys have to translate all of this sometimes, right? If we're risk on, we're buying exotics to benefit from a carry. If we're risk off, and you might say to yourself, this is a risk off moment, you're selling the heck out of emerging markets. You're destroying the peso, you're destroying the Turkish lira, you're destroying the South African rand. But Ashish says, well, what about the remittance of the peso? Okay, well, if you believe Mexican Americans are sending money home because of the COVID-19 virus, okay, then you would expect a higher than usual remittance. But the thing is, there's so much demand for the dollar. Think about this, guys. There's so much demand for the dollar that central banks have run out of dollars. And the Fed has had to create new dollars to give to them. Let me say this again. Central banks around the world have so much demand for US dollar that their vaults are now empty. There's a massive demand for dollars. But you want to sell your dollars and buy some Mexican peso? What? You want to sell your dollars and buy some Turkish lira? What are you talking about? The dollar is redonkulously in demand. Right? Like, it's crazy how many people want to get back into the dollar. By people, I mean foreigners, foreign countries, foreign central banks. So you can't just say, well, Wayne taught me, 6 years ago that Mexican remittance trade starts just before the first of the month or on the first month. Okay, that is true, but we're also in a global pandemic, right? Like, this isn't business as usual, right? So like 2.3 billion, 2.36 billion moving to Mexico, who cares? Trillions of dollars are being demanded, right? So I'd just be very careful. Okay? I'd be very careful with just throwing down a normal market trade? Okay. Are Americans ready to give up their dollars to buy exotic currencies? I'm not so sure they're that comfortable right now taking that kind of risk. Maybe in the near future, but maybe not in the near future. So just think about it that way. These trades matter, guys. These trades mean something. You have to get an American to give up their dollar to buy Turkish lira. Most Americans don't even know where Turkey is. Most Americans probably haven't even heard of Turkey. And if you mention it to them, they probably giggle like, oh, Turkey, like Thanksgiving. You're like, dude, are you 12? But it happens. It's amazing. Right? So when are they going to like start cornering the market on lira? Like, maybe not today. Don't be so aggressive when the market's collapsing. Okay? So anyways, let's switch this and look at it from a different point of view. I just want to show you that we lived that plan and it fulfilled its destiny. And where were we Sunday night? Right here. Our trade plan was down. Why? Because of this line in the sand? No, not necessarily. We were risk off. And I get emails from trusted websites all the time that tell me risk off, the dollar's going to get weak, or things are improving in America, so the dollar's going to get strong. I hear it all the time. Let me just be clear. That's 100% wrong. It's 100% wrong to think when the markets are good, the dollar gets strong. When the market is bad, the dollar's going to get weak. It makes no sense whatsoever. So you got to be very careful. So on Sunday afternoon at 6 p.m. Eastern time, we got together as a swing trading group and day trading group. And we said, risk off, dollar strong. Then we looked at our charts and said, fire for effect. And our general plan was down and up and down and up and down and up and down. Okay? Well, my belief, Nintendo, is they don't understand. They're not doing it out of ill will. They just really don't understand. And if you buy a textbook on finance and they're talking about, I guess it'd be an economics one, but you get an economics textbook and they explain to you how money demand creates strength and weakness in currencies and pricing, all that. You will see, like, people are reporting what they've been taught. And that's what the economic theory is. And it can be completely explained through models. The issue is the models are not untrue. They are true except for behavioral finance. So you got to go to the next step and do some behavioral finance on top of macroeconomic theory and demand theory for money and all that kind of stuff and say, well, on a global context, when it comes to behavioral finance, which means, let's say, emotions in the market, like fear, the US dollar acts or behaves differently. Not because the models are wrong, but because they're not including behavioral finance and such. So if we were talking about the euro, then the models would be true. When we're talking about the reserve currency of the world and you sprinkle fear into it, then the models are 100% wrong. But I see reports literally on a daily basis. Ping, this website says this. Ping, that website says that. And I've never actually read the articles, but you can see the tone from the language, like dollar is weak because things are getting bad, because of how bad the weekly jobless claims were. You're like, whoa, they don't understand. They literally don't understand. They think they do, though, and they're highly educated, and they're repeating what they were taught in the school. But obviously, they've never had to trade it. Because if you had been a trader at least 1 year, you'd realize in that situation they're actually wrong. But anyways. Okay. So Harvard did not teach me that. But I'm right. Cool. All right, let's do, how about this? We're at 144 likes. I'll wait until we get to 150 likes, and then I'll take requests. Please click, I need, son of a, gotta turn this stupid drawing tool off. Okay, cool. Thank you, guys. I know, it's shameless, but come on, click the stupid like button. Kick down, come clean, don't be a holdout machine. Your mother would be so angry with you right now if you didn't click that like button. Come on. Oh, it's too much effort. I'm too busy, dude. I'm too busy. Come on. All right, thank you. Okay, what do you want me to cover? Let's open this up. Let's do requests. I might not cover it, but maybe. Crypto's on Goldie, huh? Hope got blocked. I see what you said, Hope. Whoa, whoa, whoa. Don't get on Hope's bad side. I'm glad Hope is a friend and an ally. Andrew's being blocked because he said pound dollar. Yeah, that's interesting. All right, so I will actually start with gold. I stink. And that's that. So what we've been talking about over the last week and a half, 2 weeks, is that we were somewhere in the mean, and it makes it kind of tricky because you're basically, right? Yeah, I hope Hope is an ally. Yeah. So anyways, so we were at the mean, okay? And what I was suggesting with gold is there's basically a 50-50 chance of where you're going. It's not making higher highs, it's not making lower lows or whatever. We're at the mean. Going all the way back to the beginning of the year, we're at the mean, the average price. So on a shorter time frame, there's a plan going down to here. And by the way, yes, we did this on Sunday. So if you join the swing trading group and the day trading group, you can meet with us live on Sundays and plan your trades for a whole week in advance. Excuse me. Because that's what we did. So we had this, if you're a bear, one standard deviation from the mean to the downside. If you're a bull, then your plan was this, and probably one standard deviation from the mean to the upside. And you'll say, well, that's interesting because the pivots are telling us that. And then you'll say, well, maybe these pivot formulas are based on standard deviation from some sort of average. Oh, snap! You just figured out pivot points. They're measuring an average, a weighted average, and then looking at standard deviations from the mean. Oh, snap! That's what pivot points are. Trade up, please. Is that what you're saying, AJ? Isn't that interesting? Did everyone have an aha moment? Oh my gourd. Oh my gourd. What? Yeah. That's all it is, man. That's all it is. It's statistics. Now, I actually enjoyed my statistics class at Harvard. That one was neat because a lot of this we do in our analysis. And so I had to do the math on all this kind of stuff to understand all this, right? So once you start understanding the statistics, things become very clear. So anyways, you're like, oh, well, if it's going to be bearish, it's going to fall a standard deviation from the mean. But if it's going to be bullish, it's going to rise a standard deviation from the mean. So where's the mean? Well, the mean is here, but we're not in pivots. We don't do average, right? Average is otherwise known as mean. That's what a mean reversion is, right? You revert back to the average, or you go deviate, standard deviation. You deviate from the average. How much do you deviate? Well, a standard deviation, positive or negative, okay? But here's what I'm getting to. Pivot points use a weighted average to try to use market sentiment. So it's better than just what's the average? Like, who cares what the average? What is the market sentiment over the last period? So you can see from last week to this week that the central pivot rose from here to here. It went through a bullish period. Okay? But that's not actually what it's doing, because that's also kind of, you can get that same effect by average. What it's doing is high, low, and the close, which was high as well, meaning that is the part that moves things. So you get a central pivot point being a sentiment weighted, a sentiment-based weighted average over the last period, okay? So we're here, and therefore we said, well, it's either going to move one standard deviation above or one standard deviation below. And you filter through this through your fundamental bias. So you're like, well, I'm a bear. Great, this is a sell zone. Actually, this is a sell zone. And we knew that on Sunday. So on Sunday, this is where we started on Sunday, and you knew the target was down there on Sunday. You knew that. If you were a bear, you're well on your way. Okay? And if you're a bull, you're doing something else, right? If you're a bull, this is your buy zone, and you believe we're going to end the period up here, one standard deviation above the mean. So you just filter everything with your bias. And if you're right, you make money. If you're wrong, you'll lose money, but you'll know when you're right. If you're down here, you're no longer a bull. If you're up here, you're no longer a bear. But this is a buy, and this is a sell. Couldn't be any easier. Now, it can be easier because what we prefer as traders is to see something like this. Up, 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 down, down, buy. 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 Up, 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 up. Okay, that's what we want to see, or the opposite of that, of course. So if you find that this was interesting for a while, and then it double topped, and then it made a lower low, then right, and now you're not so sure, then don't trade. If you're not so sure, don't trade. I think there's a lot of bears that would sell this because they see this is a top, this is a low, this is a higher high, this is a higher low, double top, shields up, red alert, boop, 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 right? There's a whole thing in my book about this. That is a huge red flag. A bear would assume a lower low. Holy snap, a lower low. So what would a bear do? They would absolutely be certain it's making a new lower low. Because that's a lower high of a double top, which is called a hammock, which is called a 1, 2, 3 reversal pattern, and a bear would sell that because they're certain this is coming down. Okay? No, that's not a submarine. That's no, I'm doing shields up, red alert. That's Star Trek. That's Star Trek. All right, Peter says it's a Navy ship. What can I say? It's a Navy ship. Yeah. La la la, la la la. Let me scroll back up. You are not alone. Ruble, no. Kiwi Swissy. Okay. I'll do Kiwi Swissy. Thank you for your request, by the way, guys. Okay. Swissy weakness. Let's move them all to hourly. Let's all do this hourly. And this, look at that, huh? I mean, it's so straightforward. Look at this planning. On Sunday, look what we had. Lovely, huh? If I had $1 million, I'd buy you a fur coat. All right. Anyway, so that one we're not interested in. First of all, you want to look for congruency. We had the beginning of the week with pound being strong. So that was the big question mark one. Okay. So that one you could already see is not giving you entries. So take a walk. Kiwi Swissy, on the other hand, is a little more okayish. So we were risk off at the beginning of the week as a swing trading group. So I'm going to look at it from a bearish point of view. Drop into a smaller time frame here. And it hasn't been great. It hasn't been great. So you had to wait for the timing. Okay, you had to wait for the timing. Not quite there, not quite there, not quite there. But you know, as a bear, the point here is as a bear, you want to sell 57.5. If you're trending below 57.5, you're taking shots. If you're above 57.5, you're not taking shots. So let's adjust here and carry that forward based on day trades. Okay. And it was only basically yesterday that you had some sort of shot as a bear. Okay. Our target currently is 66.5. No, 56.5. You're selling at 57.5. So this is only 50 pips profit right now. It's nothing. I got chunks of corn bigger than that. Okay. But the plan in the next 12 hours or so is this. Unfortunately, it's the same target as yesterday. So it's showing you that the conditions are not fabulous yet, but it's only tight because we didn't hit the target yesterday. But what did I show you on, I think it was a yen pair? There were 3 good trades over the course of 3 days, and on the third day, all 3 hit the same target. Day 1, you had 200 pips, right? But it took 3 days to hit the target. Then day 2, you had 150 pips, and it took you 2 days to hit the target. And on day 3, you sold it, and it dropped, hit your target, which is the same target here, same target here, same target here, based on the collapse or the contraction of the expansion, the contracting expansion. But they all hit because they all end up lining up because each range got smaller, right? So if you think of it this way, each standard deviation from the mean got smaller. Okay? Which is what? The inverse of the square root of something else. I can't remember. Okay? So anyways, there's, right? So hopefully that was helpful. I'm trying to shine light, not necessarily on the technique, but on the thought process. And if you're a bull, you'd have to look at this on a daily and say, not under these conditions, not today. A bull would look at this and think they might have to wait 2 or 3 days before they get a new entry. Thank you. Thank you, Peter. Well, why are the Swissy pairs so jagged? I think what you're seeing is some currencies are strong, some currencies are weak, some currencies are neutral, okay? And Swissy isn't the primary funding currency. I wouldn't say it's a dollar or a yen. It's right in there though, but dollar and yens are more interesting now. Okay. Somebody asked me a question about the Bank of Japan's discussion recently. Who sent me? Is the person here that sent me that here today? Maybe was that Polly? Was that what you were referring to? Sure, Peter, I'll get there. I'll do that next. Anyways, I didn't read the article, of course, but from the title, it said something like Kuroda said if they hit their 2% target, they're going to have to do something to reduce the inflation, something like that. And what that means is that if Japan has 2% inflation, the BOJ will actually raise interest rates. We'll call it little I. Above, right? Raise interest rates above I prime, which would be, let's say now, neutral rate. And they would raise interest rates, and this would help reduce inflation. Okay. And it reduces inflation because when a currency, not the reserve currency, but if any other currency on the planet, if their central bank raises interest rates, the rising interest rates tends to attract investors because they get better returns. And that increases the value of the currency. So the value of the Japanese yen goes up. And when the value of the yen goes up, you can buy more things with your yen. Or to say differently, you need less yen to buy the same things you used to buy. And that means prices in terms of yen go down, and falling prices is a reduction in inflation, because an increase in inflation is prices going up. So if you need less yen to buy a Coca-Cola, the Coca-Cola hasn't changed. The purchasing power of the Japanese yen has gone up. So anyways, that's the answer to the question. Christoph, why don't you go to swing.fxbootcamp.com and find out? It's less than $10,000. It's less than $9,000. You don't have to pay $8,000 or $7,000. Not even $6,000, $5,000, or $4,000. Less than $3,000. Less than $2,000. Wouldn't it be a great deal if it was a $1,000? Well, it's less than $1,000. It's not even $900. It would be insane to offer it at $750, but I'm crazy. It's less than $750. In fact, it's less than $650 or even $6. Like, dude, go to the website, find out. Yeah, there's not a lot of sales to it. Right? It's just, what does it cost to not be in the swing trading course? Yeah. No, I know what you guys go through, though. I know you're clicking on things and watching YouTube experts and all this kind of crap, and that's what's happening. Right? It's way less than $1,000. So I've always said it, money shouldn't be a big problem. Oh yeah, I'll put a countdown timer on it, right, Jim? Countdown. It's only good for the next 3 hours, 2 hours and 59 minutes. Oh my God, it's counting now, and I better buy while I can. And there's scarcity. There's only 3 memberships left, guys. You better buy before it goes down. Oh no, there's only 2 memberships left. You better jump in, man. Better jump in. So anyways, just join. Right, Jean-Guy, that is a question, right? What does it cost to not join? Yeah, probably everything. All right, so Let's look at the index here. Yeah, I mean, the only real situation is if you live in a place like South Africa and the currency is at best terrible, and now under these circumstances is frightfully weak, then everything on the planet for someone in South Africa is ridiculously expensive because the currency doesn't buy you anything. Well, I can't do anything about that, right? ADP non-farm employment change? What the heck is that? What's an ADP non-farm employment change? Yeah. Yeah, well, CAD is being attacked, well, being affected by the oil war. They're not in it, but that's right. That's how it is. So pig is strong, Aussies, Euro crap, New Zealand, Swissy actually quite weak, which is strange, but yen is strong. Again, dollar is weak. So this is weird because this is sort of risk on, risk off. So, this coming down, this is moderate, this is risk off, this is risk off, this is risk on. This is neutral, so Asian currencies are neutral. Swissy's weak. So this is kind of wonko, right? Well, we'll find out. So let me help you read between the lines, guys. I just went through like 10 pairs with the mindset of risk off. And did you notice that most of them have produced at least some level of profitability? But I indicated to you that we're at prices in which a bull would now buy. These were the obvious places a bear would sell, which I told everyone in my group, right? That those were the areas where bears would sell. And now, in many of those cases, we have simply moved down to the price where bulls would buy. And so what we're seeing now that we're testing this is bulls might buy, they might not. It may do this and bears take over, so we don't know, but we do know bulls live at certain prices, and we're testing a lot of those prices. And what happens in that scenario? Well, maybe yen gets strong and dollar gets weak, and you're like, whoa, that doesn't make any sense. And this gets neutral, and this gets neutral, and euro sucks, but pound is awesome, right? And now this is down, but this and this is down. And what you should end up with is that. Do you see low-hanging fruit today? Okay. I would say not. And even all week, there hasn't been low-hanging fruit. We even talked about that on Sunday and Monday. On Sunday, we had great trade plans. We met again on Monday night. And a lot of them hadn't produced yet. So the whole topic Monday night, 14 hours after the trade plans, was like, we're not right, but we're also not wrong. Okay? So now another 24 hours go by, and most of those are profitable now, but not massively, not great. And now it's Wednesday, and we're testing bullish entries. Look, there's not a lot. So what do? You establish a bias, which you've had for weeks and weeks and weeks. You're risk on or risk off. Then you look at market conditions. Does the market favor your bias? Yes or no? You can do it on a 4-hour chart. You can do it on a 1-hour chart with daily pivots. And say, does this look like it fits my bias? And for the last 3 days, it hasn't been terribly bullish, and it's been a little bit bearish now. And then yesterday was very bearish, and a lot of those produced. But now we're in a zone where maybe tomorrow's not bearish, and maybe tomorrow's a little bit more bullish, or maybe we're running into the big risk events of the week. What are they? Weekly, and for lack of a better word, and monthly jobs. Now, one is employment, and the other one is unemployment. So you got to kind of, right? Is it that surprising that we're in the middle of the week? Right? Is it that surprising we're in the middle of the week, right before two massive, at least two, there's more news than that, but at least two massive economic releases? Like, is there any surprise that now we're neutral? One of the messages I gave on Sunday was, we're going to run into consolidation this week, and you're better off being in at your price early in the week if you get your price. And if you don't get your price, maybe you don't trade this week. Okay? So you can't just walk in every day and trade like it's a video game, like, oh, what tomorrow never matters, it's all now. No, not quite. Okay, not quite. These things matter. If you're an economist, these things matter. If you're a central banker, these things matter. Okay? So, be wise. What is your bias? And are market conditions tomorrow favorable for you to trade your bias? Can you guys do that for me? And if the market conditions are not clearly favorable to your bias, then don't trade. Oh, they're just on charts. They're just on charts. I need a chart. If I change this from pound dollar to something else, it doesn't matter. The indicator is measuring the Aussie dollar versus all currencies. This is measuring the euro versus all euro currencies. Don't look at like, what's this USD CAD? Irrelevant. This is just measuring the CAD versus all currencies. Okay? CAD yen, it's not looking at CAD yen. It's looking at yen versus CAD, yen versus euro, yen versus pound, yen versus dollar, yen versus Aussie dollar, yen versus Kiwi dollar, yen versus Canadian dollar, yen versus American dollar. It's an index. It's just sitting on a chart. Okay, that's all. And this is in the MetaTraders site, metatraders.com. And to get this, you do the upgraded complete toolkit. Because you don't need this. You don't need that. So it's not in the basic toolkit. But if you want the complete one with all the extras and fun things, this is included in that. But it's not necessary because for 20 years, I would trade on something like this. And this is my index. Okay? Aussie versus yen, Aussie versus Swissy, Aussie versus pound, Aussie versus dollar. In a matter of seconds, I have an index and I calculate it in my mind and I look at that and I go, oh, and I'm done. That's what you need. And you get that included in the $5 content. All right. So it was a wonderful day. I got electricity. I have power going to all my machines. I got internet. Flowers are blooming. Birds are singing. Pretty soon I'm going to have baby geese walking around my yard. Man, I just explained that. Go to metatraders.com and get the upgraded complete toolkit, and it's in there. The indicator is in there, and the templates are in there, and the profiles are in there. So you'll need to install the indicator, then you'll need to install the template, then you'll need to install the profile, then you pull up the profile, and boom. It'll be there because the profile is preloaded with the charts, then the charts will be there because they've been preloaded with the indicator, and the indicator will work because you installed the indicator. Cool. Well, thank you, Maurice. I appreciate that. All right, thank you, everybody. I'm glad you're healthy. I'm glad you're safe. I'm glad you're sane. I'm glad you're surviving. And I honestly hope you're thriving. These are some pretty amazing trading days. I've been doing my best to stick with you and be with you during these extraordinary times. This is like my 5th or 6th crises So to me, it's just these things happen, and they should actually be some of your best trading. And for those that don't have that kind of experience, this could end up being your worst trading. This is what blows you out. So I'm stepping up, and I'm adding hours and hours and hours and hours and hours additional time to be with you over this time of crises that may be a blessing in disguise. So swing.fxbootcamp.com if you want to join. You get the day trading course and the swing trading course included free. But the most important thing is I teach you how to make decisions. And I will see you guys tomorrow, and then I will see you guys on Friday at FX Street's YouTube channel for Trading on Farm Payrolls Live. I don't know which one it is, but it's pretty close. I think it might be the 14th anniversary. Does anybody know? It's either 13 years and 11 months in a row, but it might be the 14th anniversary of me doing that one webinar. And I doubt your last guru has been trading Forex for that long. I've been doing just that one webinar for 14 years. Yeah. Been working with FX Street for probably 16 years. Yeah. So, nonetheless, oops. Oh, I got to go here. It's not coming up. No. Why isn't this not working? There we go. There we go. Cool. So peace on earth. May the pips be with you. May our profits be above average. Thank you for being on my team every day. Thank you for being in my life. Thank you for all the fantastic comments that you guys leave on the videos. I read them, and like every single day there's 12, 13, 14 comments that are really